Yo, what's the dealio, y'all? Hey, listen, in this video, I'm going to be talking about fair value gaps. All right. And fair value gaps have made me some pretty good money trading. They've also saved me a lot of money as well. So I'm going to break it all down for you. And after this video, you're going to become an expert on fair value gaps. All right. So I like to break things down very simple. I don't want to overcomplicate you, right? I don't want to make this sound crazier than what it is. A fair value gap is all it is a small place on the charts where a stock could come back up to. That's it. Not only could come back up to, will come back up to at some point in time. Okay? It could be from the upside or it could be from the downside. So, have you ever been in a trade? You got in on a call going up, and then it comes back down. You're down 10, 20%. You get out of the trade, and then the stock goes back to the upside, and you can't figure out why is that. Let me tell you the reason. It's because there was a fair value gap on the charts that you did not see. And that's where the stock came to grab some liquidity and then go back to the upside or the downside. All right. So what basically, I'm going to go to the charts and I'm going to show you this. Once you understand how to see and pay attention to and find fair value gaps, you will be unstoppable in the market. Literally, you'll be unstoppable. All right. When you're looking at the charts and you don't see a fair value gap, then that means that the stock really could blast off for the day. If you do see one or two fair value gaps, that means that the stock is most likely going to come down and test those fair value gaps. Or if it does blast off the next day or two, it will come back down to come and fill those fair value gaps and get that liquidity. All right. So I'm going to go into the charts and I'm going to show you guys exactly what I'm talking about. So let's get it. All right. So right here we have Google. Okay. So a fair value gap is going to be a 3-candle sequence. All right. Now you may have to go on different time frames to find it. Right. So let's look at Google right here. Okay. So you see it came down, came up, came down. Right. Now, what does this mean? Why do I have this little box here? This box is a fair value gap. All right. And what this means is if I go to the 5-minute time frame, I have it drawn out right here. So it's a 3-candle sequence. So if it's from the downside, you have, we need 3 candles. And what we need is the bottom of the first wick. The bottom wick of the first candle. So this is the first candle of the 3-candle sequence. The bottom wick of the first candle. And then the top wick of the third candle, right? You see how it makes a gap right there? If this wick was here and this wick was here, this would not be a fair value gap. But this is a perfect fair value gap, okay? So this is a gap. Now, what happens is when the stock comes down and then you have this fair value gap, the stock has to come up and grab liquidity, and then it's going to go back to the downside, or it will push through and then go to the upside, right? This is coming from the bottom. So look what happened. Fair value gap right here, and then boom. We got these two are two tweezer candles right here. This looks like a tweezers. And then this is a reversal. Reversal happens. And then look what it does. It goes right back up to where? This fair value gap. All right. And then look what happens. It starts to reject. It got its liquidity. And then look what happened. It comes right back down. Okay. Now let's go to a different day on Google. And we could see this going to the actual upside. Okay. Let's go to, and this on the 5-minute time frame. Let's go to a day where, no, let's go to Tesla. Tesla just broke out today, right? Let's see if it did it today. So today, Tesla just broke out. Let's see. So this is on the 15-minute, right? Let's look at the 5-minute. Okay, perfect. So I see a fair value gap on the 5-minute time frame, right? So let's look at it. So the fair value gap I see is right here. We got 3-candle sequence, 1, 2, and 3. All right. We got a 3 candle sequence. So let's go ahead and make our fair value gap, which is going to be right here. So our 3 candle sequence, we got and this is to the upside. So the top wick of the first candle and the bottom wick of the third candle from the upside, right? So boom, boom, go there, boom, all right? And then we make this. Now, look what happens. This is another fair value gap. So even though the stock is coming up, look what happened. It came right back down to this what? Fair value gap. And then it ended up breaking lower and going lower, right? So 3 candle sequence. I did this on a 5-minute. So look, it looks like it's blasting off, right? On the 15-minute, looks like it's blasting off. You don't see any fair value gaps, but you go down to the 5-minute and then you see it. And now when you're getting a reversal, so now this stock right here, Tesla, it reversed off of, it rejected off of this level right here. And then this candle opened up, came up here, rejected again. And then look what happened. It came all the way down where? To this fair value gap. All right. This happens every single day in the stock market with multiple different stocks. It does not matter what the stock is. All I have to do is find a fair value gap. Okay. And this explains why stocks go up and they go down. So let's go to Palantir. They've been blasting off a little bit lately. So let's go to Palantir real quick. They didn't blast off today, but let's look at this on a 5-minute from yesterday. Let's look at it. So, all right, perfect. Let me show you guys. So look at this, everyone. So we have Palantir. This is a fair value gap. We got 1 candle, 2 candle, 3 candles, right? The top wick of the first candle and the bottom wick of the third candle. Boom. That creates a gap. Now let's look. Let's make the gap. Boom. All right. Boom. Now look. Palantir is coming right back down to this level right here, and this is a fair value gap. So look, it did it. It had a fair value gap. It didn't come down today. This was on Thursday. It didn't come down to the fair value gap on Thursday. It actually ran up, but it did come down to it today because this is a pretty large fair value gap. This is 113.58 all the way up to 115. So that's a $2 gap right there. So it has to come down and it has to come and test here. So if it comes down here and then it goes to the upside, that could happen, or it could come down here, break through it, and then it could go lower, right? But anytime you have a stock that breaks out like this, most likely there's always going to be a fair value gap, maybe on the 5-minute time frame, and then from there you can create that fair value gap, and then you can trade it off of the 15 or the 30, right? If you see a stock have a fair value gap, then you know that it's coming back down. So we got this fair value gap right here, and then Palantir gapped up as well. It closed over here, and then it gapped up as well. So Palantir is going to be coming back down to most likely it's going to come back down to around like 110 next week sometime. But this is a fair value gap. So I just showed you 3 of them. I showed you one on Google to the downside. I showed you Tesla to the upside, and then Palantir to the upside, but it's coming right back down. All right. So we're going to recap this real quick. Fair value gap, okay, is a 3 candle sequence. All right. And then we have, if you're looking at a bullish fair value gap and the stock is going up, we're going to say you want to map it out from the top wick of first candle and bottom wick of third candle. Okay, that is a fair value gap from the upside. Okay, now let's say that the stock is going down. It's going to be the bottom wick of first candle and top wick of third candle. All right, and then you get your little rectangular tool and you map out that gap right there. And this lets you know where the stock is gonna come back to. So even if you see a stock going to the upside, just know it's gonna be coming right back down to the downside. All right, it is literally that simple. All right. Like I say, I don't want to make this more complicated than it is. I'm telling you, when I found out fair value gaps, that is when I started to love rejections because I knew where they were going to be coming to. All right. I knew where the rejections were coming simply because I was like, man, this makes so much sense. All right. A fair value gap is just like a gap up or a gap down. A stock is all about balance. So when you see a stock going crazy to the upside, just know it's coming back up to the upside. Coming to the downside. When you see a stock going to the downside, just know it's going to come back up to the upside. All right. I want to show you guys one more thing really quickly. Let me show you this. All right. If we look at Google, let's look at Google on a 15-minute time frame really quickly. Okay. Now let's check it out. Now we have 1 candle, 2 candles, and 3 candles right here, okay? Or you could look at it, well, we got this right here. So this has a very small wick right here. And then it came down right here. So this is another fair value gap to the downside. And look what it did. Google came right back up there. It didn't get too high, and then it came right back down. All right, another fair value gap. I'm telling you guys, these gaps, they exist every single day. So I want you guys to add this to your toolkit, add this to your arsenal. And once you start paying attention to these fair value gaps, you're going to become a savage in the stock market. All right. So I hope that helped. If it helped, let me know in the comments. And always remember, like I always say, make sure you get out of your head and go get into this world because your head is a dangerous place to live. All right. And also remember, the more you study, the less you worry. All right. I'm going to see you guys on the next video. Peace.